Welcome to the Trading with Venus podcast, where we help you establish strong trading habits, generate consistent profits, and create the lifestyle you desire for yourself and your family. Now your host, Raman Gill.
Welcome to Trading with Venus podcast, episode 59. I am your host, Raman Gill. The big thing that we're going to talk about today, or the most important thing that I want to cover, is our Turning Pro Challenge. A few weeks ago, I had started talking about how to become a professional trader. And during that, I laid out a process on how somebody could act like a professional trader and behave like a professional trader. And we could actually get the same results that a professional trader would get, regardless of the size of our account. So one of the things that I have seen is there has been a lot of interest in this. So I thought I will do an actual challenge. In the challenge, what I'm going to do is first I will walk you through how I'm going to run this challenge, how we will all do the tracking, and then I will go through the different worksheets and stuff. I've also set up an account for $3,500 that I will share with everybody. So every Friday going forward here, starting next week, we will do a review of this and we'll take a look at how we kind of did in the account and how the account is growing or depleting or as things go. So we'll take a look at that. Before we get started, though, just a quick disclaimer, this is for educational purposes only. Trading is a risky business, so please be careful with your money. So this whole process that we're going to follow here is the difference between amateur and professional traders. So a lot of times when we get into trading, our mindset is very much of being an amateur. As we develop as a trader, we start to learn that we need to do things differently. So this is very similar to when we start anything. So when we start playing sports, for example, let's say we are playing basketball. Right, so we may start playing, in our at our school or in the front yard, in our driveway, or something like that, or in a neighborhood court where all we're doing is we are just shooting some baskets. However, as we develop, as our skill set gets better, we realize that there's more to it. There's more finesse to it than just throwing the ball at the net. And as a person develops their skill set, we start to get more ambitious as well. So instead of just wanting to play in our street, maybe we want to play at a school level or a college level. And some people would even aspire to play in the NBA. So now what we do realize is the difference between playing on the street and being in NBA, there's a huge gap between those two, right? So when we talk about trading, we're essentially doing the same thing. When we first start, we have dollar signs in our eyes, and we are talking about just playing, just practicing, or just being in the market. And as we start developing as a trader, we realize that there are a lot more things to pay attention to, and we need to focus on a lot more things. So now one thing that I have seen seems to be missing from everywhere is the process that it takes to go from the beginner trader to a professional trader. Whereas in sports, there are a lot of development camps. So you can go to a camp every summer, or you can be coached by a coach, and they will take you to the process. Not only will you improve your technical skills, but you will also grow and you will learn the process that you need to follow to become a professional athlete. And that's what seems to be missing in our industry. I find there are a lot of courses and good courses out there on how to read the charts and even learn fundamental analysis. But how do you go from being an amateur, which is what we learned because we tried to do this on our own, to actually becoming a professional? So when I first started trading, I did not know. And I started trading full time. I would come to my office in the morning, but I had no idea what to do. And I asked several people, okay, what am I supposed to do in the morning? Because when we go to work in our corporate job, there is a process we follow, right? Every morning we go get our coffee, and then we open our computer, go through our emails, and we make a list of things that we need to do, or we may have a list of things that we made on the previous day that we need to follow. We have projects that we are working on. So we have a clear plan on what needs to be done. And in the corporate world, we also meet with our management team, our manager, and the manager helps us set goals for the year, right? So there are corporate goals that need to be set and personal goals that we set for ourselves. And as a result, we have a clear plan of action. We know where we are going, what our targets are, what our goals are, and how we can achieve them. So that process sort of laid out for us because somebody helps us with that, and it's the company's responsibility, or they are the ones driving that process because it's in their best interest. And it's also in our best interest if we wanted to grow in our career, if we want to climb the corporate ladder, we kind of need to follow that process, and it works for everybody. However, there's no such process in trading, or there's no process that is commonly known in trading. Most people start off with playing in the street. And so we just start off with our small account, and then we don't know what to do. So from there, we kind of learn technical analysis, and we learn to look at our economic calendar, look for news. But then that's it. We kind of go as far as that, and then we run into problems. So this whole process is centered around the idea of the process that one needs to follow in order to go from being an amateur trader to a professional trader. So that's what we are going to look at. In order to do this, first thing we need to have is we need to have a goal, right? So we need to have a goal in order to actually get there, because if we don't have a goal, we don't know where we are going. So that's the most important thing. So we need to have a goal, and we need to have a starting point. And that's why the $3,500 that I'm starting with, that's the starting point. And it doesn't have to be $3,500. It could be whatever amount you want in your account. So I thought $3,500 was a good amount. So I just randomly chose it. There's no real reason behind choosing $3,500. It just gives us a starting point. And then we need to have a target in place. So I will share the projections that we have, and that will be our target. So our target is very aggressive. And it's not just about having a target in terms of growth in the account. What we need to do in order to achieve that is we need to become the person who is able to achieve that target. So if you want to play in Olympics, we need to do the behaviors that would help us get there. We cannot be every night, we cannot be drinking beer and eating chips and watching TV instead of working out. So we have to follow a very defined plan. If somebody wants to be in Olympics, they have to follow a defined plan. The same way, if we want to be a professional trader, we are going to follow a defined plan. I will share the plan with you. So I'm going to give you that process. I will give you the worksheets so that you are able to follow along. In just a moment, we'll cover what different spreadsheets and worksheets that we are going to use in order to work our plan. And then the next important thing is actually getting to work, right? Having a goal and a plan in place are perfect. But if you don't take action on that, if we don't do anything, if we just make this glorious plan and put it in our desk drawer, that's not going to help us accomplish the goal. What we need to do is we need to work at it every single day. So we cannot be lazy and say, oh no, I'm just going to put a trade on today, but I'm not going to record it in my trade log. That's not going to work because it will not get us to the results that we want. So it's very important that we set our plan and then we work our plan. And next thing is there will be times that will be very difficult. There will be times when the markets will do completely opposite of what we expected to do, right? And that's called market sentiment. Things happen, politics make comments, central bankers make comments, and other things happen in the market that will suddenly change the market direction, or things happen that will just push the price up or down, and our trade that may have been a good trade will go sideways. And, that's part of trading. It happens, just like in professional sports, since we've been talking about that. Hey, sometimes you roll your ankle, right? Other times you have a perfect shot, yet you miss the basket. You could be standing on a free throw line, easy shot, and you miss it. That's just how it is, right? We cannot be perfect at all times, and every athlete cannot win every competition. So we won't win everything either. However, if we follow this process, we would become a much better trader than we are today. So discipline will be the main thing that we'll have to focus on this. So sticking to it, even when things are tough, is what will require grit. We will have to sort of stick it out. And then the last step is, of course, reaching our goal. If we are able to do all this, and all I ask is try it for a few months, right? Try it for 6 months and see how you make out, right? everybody can do something for a short period of time. And if you don't like the process after that, check it out. But do give it a try. So let's get going. There are three things that we will do based on what I just discussed. In order to accomplish our goal, first we'll have to prepare. So preparation will be very, very important. I remember when I first started doing track. Actually, I had been doing track at school and I was good. I could run fast. So they encouraged me to go into track and field. So I thought, okay, well, why not? And I went to this, I had only done inter-school competitions and they were easy. I kind of won easily. So it wasn't that much of a challenge. And then I went to a competition when I was a teenager. I think it was about 17 or 18, which was a higher level. So you had some college students there as well. And so I arrived there and I see everybody is warming up. They're all preparing. I'm like, well, why would you want to warm up? Because, well, I didn't exactly have, the greatest coaching staff or anything. It didn't have a lot of support like that. It was just us, hey, we do track and then we just kind of ran. That was all. But I saw all these people really warming up and preparing. So I asked my coach actually every time my coach would encourage all of us to warm up. And I was like, oh, why do we need to warm up? Why waste our energy in warming up? There's really no need for that. And she said, well, no, you need to warm up. And so I kind of didn't want to do it. I kind of half-assed it, did a little bit of a warm up. And I went to the starting line. And let me tell you, without warming up, it was hard. I got my butt kicked in there. It was just hard. And I saw everybody, well, not everybody, but I sort of felt very embarrassed at the end of that race. So that was a very important lesson that I learned, that no matter what you do in life, you have to prepare. So even though I had been preparing in terms of the skill set, but when it was time to jump into the game, I was not prepared because I had not warmed up. So same thing goes with our trading as well. It is very important to do the market analysis ahead of time so that we are warmed up. So that's our warm up. If you do the analysis at the beginning of the week, that's good. However, we need to do the market analysis the night before so that we know what to trade in the morning and we are not caught off guard. So that's the preparation. And then execution is, of course, making sure we are taking trades based on the analysis that we did and not just making random stuff up, right? So we don't want to take trades that are unplanned, that are just spur of the moment ideas, or we don't want to do any of that stuff. So we want to execute on the preparation that we did, not just random stuff. And the last part will be review. So after we are done, we need to review the market, what happened in the market. We need to look at what kind of trade setup, what did we miss, that type of stuff. So we'll have to do all these three steps, and that's what will help us grow as a trader. So now let's go take a look at some of these spreadsheets. Okay, the first thing that I'm going to talk about is our goal sheet. So this is the one that I have shared previously. This is our this is the plan that we have. So I'm going to start off with a $3,500 account. And by the end of this challenge, in 1 year's time, the goal is to hit $38,000, right? So that's a return of around 1,100%. So very, very ambitious goal. And if you have ambitious goal, if you want to get to Olympics, we have to put the effort behind it. That's the whole point behind this process that we're going to follow. So how will this work? First thing is we will start off, because I only have $3,500 in my account. The maximum lot size that I can trade is 3 mini lots. So I will trade 3 mini lots. And if I'm taking more than one trade, I still need to keep that at 3 mini lots. So let's say I am taking one trade, then I can put all 3 lots in that, mini lots in that one trade. However, if I want to take 2 trades, then I can only take half of that size. So it will be 1.5 mini lots. Our size will have to be small because our account size is small here as well. So our position size has to correlate to our account size. So in this case, because it's 3 here, 3,500, I'm going to trade 3 mini lots at any given time, or a 1.5. If I'm taking one trade, if I'm taking more than one trade, then of course that size will go down, right? It has to be proportion, because we can't have 5 trades running with 3 mini lots each, because that will bring us to over a full lot. And the reason we don't want to be trading a full lot in this account is you lose a few trades, the whole account is gone, right? And that's not what we want to do. We need to make this trade account last. And the only way we can do it is to trade small size. So that's what we're going to do. And the idea behind this is the first week, the pip target that I'm looking for, a weekly pip target, is 100 pips, right? So I'm not looking for 100 pips a day. I'm looking for 100 pips a week. So it's a very modest target. So the idea here is that even with modest targets, we can still reach our goal. We can reach ambitious goal even with the modest target. All we have to do is we may have to make sure we are following our trade plan and we are not really going off track with that. First week, our goal is 100 pips, and that will get us $300. So we do that 4 weeks in a month, and our monthly total goal will be $1,200. So this is actually not total pips, this is total dollars. Okay, so our monthly goal would be 4,312, so that will be $1,200. So we started off with $3,500. We make $1,200 a month. Our end of the month account total would be $4,700. And now, since we have moved to $4,700, we can trade 4 mini lots right now. If we have one position, we can have 4 mini lots in one position. If we have 2 positions, it will be 2 mini lots. If we have more than that, again, we will keep our position size in line with our trading account. So it's $4,700. So again, the weekly goal will be 100 pips. And so first week we make 400. So each week we are going to make $400, and that would net us about $1,600 a month. And so from there on, we'll get our account total at $6,300. Once we are at $6,300 in our account, we can move over to trading 5 mini lots. So same thing again, 5 mini lots if we have one trade, and half of that 2.5 if we have 2 different trades, and so on. So this week we are looking for, again, 100 pips, but because our lot size is larger, we are looking at a profit of $500 a week and a monthly total of $2,000. So as you can see, this whole thing is about scalability. It's not about making tons of pips on a daily basis. It's about making a consistent amount of pips and just keeping up with that, just kind of staying on top of that. And then we are getting into $2,000 a month return, and our $2,000 a month in our profit, and our monthly total, our total in our account will grow to $8,300. And basically, as we go on, we are just scaling up. We are keeping our weekly goal the same of 100 pips, but we are scaling up in size. However, we are scaling up in size in a very slow manner. We are not going to a full lot right off the bat. So in fact, we don't go to a full lot till we have about $20,000 in our account. The reason for that is that way we will make sure we have enough runway. There will be times when this plan is not going to work. So even though we want 100 pips a week, we may have 2 losing days in a row. So our daily goal based on the 100 pips a week is 35 pips a day. Now that's a reasonable goal. It's not very ambitious. It's a reasonable goal. But there will be times when we'll actually lose the trades. So instead of making 35 pips, we'll be down 35 pips or 50 pips or even 100 pips, right? It's kind of hard to put all of that in a worksheet. It's kind of hard to put the losing weeks or days in a worksheet. So that's why I've just said an average of 100, right? So what we need to understand is by the end of the year, we may be off of this mark. However, we are still going to follow our plan. So at the end of the year, at the end of the week, end of the month, we will have a more realistic total here. So this is our goal. And then we can track what our actual results are. And we'll track that in a separate spreadsheet. But this is what I wanted to share with you. This is the plan in terms of growing our account. So again, the plan is very ambitious. The way we go about it is not. So this is where it's a difference between, okay, we set a challenging goal for ourselves, but then we follow it up with actions that are consistent and that are more relaxed. It's about consistency rather than hitting the home run every single day. We're not looking for home runs, and we are not going to hit home runs. We're just going to take the small wins along the way. Okay, so those are our projections. Now we have a goal. In order to get to this goal, we need to have a plan in place. And that plan is this one here. So the plan that we're going to follow is doing a few different things. So first thing that we're going to do is have our trading goals in place. So my trading goals that I have set, so I'm going to give you the spreadsheet that you can go download. I highly recommend putting down on paper your goals. Based on the research that has been done, if we put our goals down on paper, we are more likely to hit our goals than if we don't do it. I'm providing you a template here, and I'm also providing you an example of the type of goals that I have set. So for myself, my goals are to make 100 pips a week and trade the London session, trade 3 days per week, and my daily goal will be to make 35 pips per day. In the template here, you can choose the number of pips you want per week. And of course, your goals don't have to be exactly like mine. You're free to follow along with me if you choose, but you can set your own goals as well. The only thing I would say, don't make them so hard. Like, don't try to run a marathon every single week, because it's just hard to maintain the consistency. However, if you run 5 miles every day, it's so much easier to get to the marathon than actually running a marathon every single day. You will burn out. So we don't want to do that. We just want to go slow and steady like the turtle. So we actually get there. The goals can be something like number of pips per week, the sessions you will trade. Again, with this one, I don't recommend trading all 3 sessions. That's too much. So just pick the time you are going to trade. And if you are trading all the sessions, then know that you are looking for trouble, because that's what gets us into over trading. The shorter the amount of time in front of the screen, the better the results. And again, this is based on research that has been done in trading. So the people who spend too much time in front of charts actually have more losing trades. And I have personally experienced that. There's a relationship between the amount of time you spend in front of charts and number of losing trades. So just keep that in mind. And how many days a week that you're going to trade. It is not necessary to trade every day. If you're a swing trader, this is easier because you're only looking for longer time frame trades. So chances are you're not going to be trading every day. But this is more important for day traders. We feel like we need to trade every single day, but sometimes those days are just not good days to trade because there may be a big event. Or Mondays, for example. I don't like trading Mondays because for the most part, market tends to be range bound. So there's no point in sitting in front of the desk and just wasting time. For me personally, I don't trade that. So I'm only going to trade 3 days a week because it's hard for me to trade London session any more than that. Even with 3 days a week, I find it really difficult. That's my plan for that. So that's the first thing. We're going to set our goals. Next thing is we need to set the rules that we are going to follow. So rules are very important. In order to make sure that we don't fall off track, we need to have certain set of rules. So the first rule could be around risk percentage. How much risk are you wanting to take? Risk as an overall account size. So my goal is to not take more than 1 to 2% of my account in terms of risk at any given time, and risk no more than 1% of any one trade. So just in terms of numbers, in the amount of risk that we take, risking any more than 5% of your account in total is a recipe for disaster. Because if you lose 20% of your account in one trade, that's very hard to recover from. However, if you only lose 1%, that's okay, because you can shrug that off and move on, and you still have money to trade. So in this business, it's very important not to run out of money. because it's one of those things. You could be 3 feet from gold and, you run out of your money. So when the perfect trade sets up, you don't have any money in your account left to trade. So it's very important that we are careful with our risk. Those are some of the rules that I have set for myself. So first is not to trade more than 2% of my account, but we can do about 1 to 5, anywhere between 1 to 5, I think is okay. In my opinion, this is just my personal opinion, and then not risking more than 1% on any one given trade. And another thing that I am putting here is never trade without a stop loss. So a lot of times I will hear from traders will say, hey, every time I put a stop loss in place, the broker goes and gets it, or the market will go right to my stop and turn around from there. And that happens. That happens to everyone. That happens to me. And it can be frustrating. However, it is very important to set a stop loss, because there have been times when I have not set a stop and market goes completely crazy, especially with the market conditions that we are seeing right now. There are a lot of politics in play, all central bankers saying stuff at this point. So there is a lot of stuff, volatility in the market, and we need to take that into consideration. So it's best to have a stop loss in place. So my rule is that I will not trade without a stop loss. And another rule that I'm setting for myself is if I have 3 losing trades in a row, I am done for that day. It's best to walk away. For me personally, it's best to walk away. Some people can handle that. I cannot. I find I can go into a downward spiral with that. I can get into revenge trading, and my psychology gets messed up. So what I've found is the best thing to do in that case is for me to just walk away and come back and trade the next day, right? It's best to just leave it alone, because we have to understand cash is a position too. And cash is a very important position for us, because if we don't have a cash position, we're not in the game. And for us to win, we have to be in the game, because you cannot win by sitting on the bench, right? So that's the important thing. I'm giving you a template here. You can add your own rules that you want to have for yourself. So those are the rules. So first we set goals, then we set rules. Third one is trade management. And we're going to have some rules around trade management as well. So my rules around trade management are having a stop loss and take profit in place when entering a trade. Again, so before we enter a trade, we need to know where we are going, where we are currently, and what our plan is. If we don't have any targets in place, we don't have a plan. So it's very important that we have our stop loss and take profit in place, so we know what our maximum loss that we're willing to take and the profit that we are looking for. So I will have that in place. And another rule I have is trailing the stop. So trailing the stop is very important. So my rule of thumb is every time I get 20 pips in a trade, I bring my stop loss to break even +2. That way there's no risk in the trade. So even though the price turns around, the worst thing that can happen is that I come out of the trade at a break even. And this rule has saved me many, many times. And the problem with it is, of course, it can take you out and then go in your direction. But, it's better to be safe and then come back and play another day than to lose your account. That's very important. So I generally tend to move my stop loss after 20 pips. And then once I get another 20 pips in the trade, I move the stop another 20 pips and just kind of trail it. That's how I do my stops. However, you can trail your stops manually, or you can use trailing stops, like automatic trailing stops. It's up to you. So these rules around trade management are yours. So you make them what you want them to be. Those are just examples of my trade management rules there. Next thing is preparation. Before we actually start executing on our trade, we need to have our daily market analysis done. So for me personally, I do the daily market analysis every night, which I do as part of the TradeRoom. It's at 8 p.m. Eastern. So we look at the charts and we just look for what market direction we are expecting, where we are expecting price to go, and marking the technical levels that we are going to trade from. So those are important things. And another thing you want to keep track of is any news that's coming out and the potential impact of that news. So we basically need to have a trade plan. What are the good pairs to trade that day? What levels we are expecting them to go to, and all of that. This is all done as part of our TradeRoom. So we are all set. So that's not a problem. As long as you are part of that call, you are good. Or you can do your own analysis as well. So that's up to you. So next thing is, when we are doing our daily market analysis, there are a couple of or a bunch of questions that I do recommend you ask yourself. What setups do you anticipate to show up and at what level? So when we do the market analysis, we want to mark the levels. And a lot of times I will say, okay, I'm looking for a pullback into the pivot point. As long as price stays below the pivot point, I'm expecting it to drop. Or I would say, okay, I'm expecting the price to pull back into the support and resistance level. And if the price stays below the support and resistance level, because it may be a swing point, looking for price to drop. So that type of stuff. So I'm marking those things. So it's best to kind of write those down. And then we're looking for any high probability areas that we are targeting for that. It's good to have that on paper, because sometimes when we come to our session, when we are ready to trade, we may have forgotten all about it, because in the heat of the moment, we may not remember all this information. So it's best to write it down. And then also looking at how will I enter and exit trades. Of course, your goals and your rules can be different than mine. So I recommend writing them down. Okay, so once we have done all of that, then we go to our post-market review. But before we go to post-market review, one thing we do need to do is look at our trade log here. So I'm providing you a trade log template worksheet. So in this trade log, we have this spreadsheet where we can enter our trades. So when we open the trade, when we closed it, the currency that we are trading, the position size that we are taking, what direction, whether long or short, what our entry price is, where our stop loss will be, where our trade profit will be, whether it was a win or a loss, and number of pips and the percentage profit, all of that. So there's a spreadsheet, you can track that in. And also for market analysis, I'm providing this spreadsheet. So in the trade room, we are going to follow this. So every day I will post this spreadsheet after we do our market analysis. In the spreadsheet, we are looking for each pair that we are going to do analysis on. And in the spreadsheet, we'll take a look at the direction that we expect the market to go. If market goes, if the direction is long, we'll put that in there. If we're looking for price to drop the next day, we'll put short in there, or we can go with like red and green type of thing. We can just color the cell that color. We're looking at potential entry points. Sometimes there will be a couple of different entry points, right? If the price stays above a certain level, then it's likely to go higher. If it stays below a certain point, it's likely to drop. So in that case, I have provided in the spreadsheet both entry for a long and a short potential entry. So all of that is in here. And then we also look at what news we are expecting during that day. So we'll put that in as well. And any comments that we may have, right? So that can be added here as well. So this is a spreadsheet we will do for our trade room every single day. So we'll have the market analysis call as well as the spreadsheet. So spreadsheet is really a quick reference. So when we come to trade in the London session in the morning, then we have a quick reference of what we are looking at. That's our execution as we are going along. And after that, once we have done our trades, I don't like taking too many trades. My rule of thumb is 1 or 2 trades, and sometimes I may take a third trade, but usually I like to stick with 2 trades and not take too many, because sometimes they can all go wrong. And then we are multiplying our losses. So that's not what we want to do. Okay, so that's what we will track. So going back to our worksheets, after we are done trading, one thing that we do need to do on a daily basis is daily review. And this is all personal for ourselves. So I use Evernote for doing all of this. I will usually put my charts in there. I will say where my entry is, where my exit is, all those kinds of targets will be in there. And next week, once we do a review, weekly review, I will share that with you. And I just use, I think, a free Evernote account. So it's just a good way to capture everything. And then we'll review it on a daily basis, and we'll review on a weekly basis here as well. So in terms of the daily review, we're looking at how did the market behave, because sometimes market may not behave the way we expected it to, because maybe something comes up, maybe somebody made a random comment, and we need to capture that kind of information because that will repeat itself, right? So if President Trump said something and he said, well, weaker dollar is good for the trade, then the US dollar is likely to drop, right? But we need to capture that so we are not, even if we didn't know it at that time, we know next time either him or somebody else says something like that, we are likely to see a similar result. It will help form those correlations in our mind. The reason we're doing all of this is basically based on science. You can create neural pathways in your brain. The more you do of something, more of a habit it becomes, and more you will crave it. It's like working out. If you keep working out all the time, your body actually craves the workout and you'll feel lethargic if you don't do it. That's what we're trying to do. We are trying to create neural pathways in our brain so it becomes easier and easier to do. So we'll look at how did the market behave, what setups were present, and how did they play out. And also we can take a look at what setups were present and we didn't take them so that we can take them the next time. And we'll capture a setup that worked really well. So whether we were in that setup or not, it's a good idea to capture a good trade setup that happened. And I do the 10,000 trade show. It's kind of based around this idea. It's putting in 10,000 hours, right? If we keep looking at these setups, we'll be able to recognize them under live market conditions, because if we can see them, we can trade them. So that's really what we are looking at. So if there was a setup that worked really well, whether we took it or not, it's a good idea to capture that so we can take it the next time. And then next thing we're going to do is, because this is like the end of the day thing, what do we expect the market to do tomorrow? And again, this doesn't have to be a lengthy story here, just a couple of lines, and that's enough. So it's just short and sweet. So it shouldn't take us more than 10 minutes or 15 minutes to do all of that. It's not a big thing, but it's a matter of actually doing it. That will be the important thing. It's like going to the gym. Once you get there, it's okay. But getting there is the challenge. So that's what we may experience. And this is where we'll have to persevere to keep going on this. And next thing is, did you follow your trade plan? If yes, then, well, that's great. If not, then what needs to change, right? Why didn't we follow our trade plan? And then next thing is, what changes do we need to make going forward? And this includes everything, right? Psychology will be the most important thing here, because sometimes we just get impatient, or other times we just don't want to, we're just taking a bad trade. If we know in the moment that it may not work out, that we're just either revenge trading or we're just getting frustrated and we're just entering a trade just because. So those things we want to capture. And also, I think another good thing to capture is, what did we do well? Because a lot of times we tend to beat ourselves up as traders. So we beat ourselves up over bad trades that we take, not seeing trades, coming out too early, staying in too long. There are so many opportunities for us to beat ourselves up. It feels like we are a punching bag for ourselves every single day as traders. So it's important that we start forgiving ourselves for things. So if we look at what did we do right that day, that will be very beneficial. Okay, so that's what we have for our review. And on Fridays, we want to do a weekly review. So this is basically looking at, how did the markets behave? Was there something crazy that happened? Market didn't do what the market should do. That means there's a strong sentiment driving the market in a particular direction. And why is that? But another thing that helps us understand is that there is a risk of market dropping, which is what we saw today. Because once market is just being driven on sentiment, it can switch very, very quickly, because things have to line up, right? So that's the type of thing that we'll keep in mind there. So we'll take a look at how did market behave. Again, we don't need a long story, just a few key points here. And then what setups were present and how did they play out. So again, we are doing a quick review. This doesn't have to be a lengthy process, just a very, very quick review here. And did I follow my trade plan? That will be very important here, because we will see the correlation between bad weeks and not following our trade plan. There's a high correlation between that. And then what changes do we need to make going forward? So just a quick one there. All right, so the last thing that we're going to look at here will be a little checklist that I have done. This is from the ebook that I have written, How to Become a Consistently Profitable Trader. This is in there as well. So this is basically our daily checklist. So here we are looking at, did we look at our news feeds, the different news sources here, and did we have a daily trade plan? Did we do our market analysis? Did we complete our trade log? And then did we do our post-market review? Did we do our trade review? And did we fill out that sheet that we have? So this is just a quick checklist. At the end of the day, we can just check things off, or whether we did everything or not. Another thing to keep in mind here, and this is the last thing we are going to track. So we have our goals, right? So we are going to track how we do against the goals. Now, we said we are looking for $300 that week or 100 pips that week. Did we get those, right? Did we make our $1,200 a month? So we will track those. We'll do projections versus actual. So you can add a column in there and see what really happened. So that's one thing. Another thing, so we are tracking our results. So this is tracking our results. Another thing which is critical is that we track our process. It's very important not just to look at results, but also to look at process, because if we follow the process, the results will show up automatically. So I've created this scorecard for ourselves here. Basically, in the scorecard, it just has things that we were supposed to do, and we are scoring ourselves. At the end of the day, did I check the news? If you check the news, we put 1 in there. Did I complete my market analysis? So we have the spreadsheet or going through the charts and marking the levels and stuff. Did I do that? If we did, we get a 1 here. And did I mark the potential entries and targets on the charts? Or did I put them down somewhere? If the plan is in the head, it's not a plan. It has to be on paper or something somewhere on a spreadsheet, or it has to be written down. So that's very important. So preparation, we do all those 3 things, we get 3 marks. So let's say we did not check our news, then we'll get a 0 for that, right? If we did not complete our market analysis that day, we will get a 0 for that. It's a simple 0 or 1. If we do it, we get a 1. If we don't do it, we get a 0. So that's really what we're looking for. It's a quick thing, but it just helps us track the process. And the next thing is execution. Did we take our trades as we had planned them? If we did, we give ourselves a 1. And did I enter my stop loss? Did I set my profit target? And did I follow my correct trade management rules? So if we follow all of them, so we'll get 1 for each. And in total here, we will have 4. The perfect score will be 4. And then other thing is, did we do our post-market review? And did we manage our emotions properly while we were trading? So if we did all of those, so we'll get 1 each, and then we will have 2 here. So the total score we have per day is 9, and we'll track that on a consistent basis. So we'll have a scorecard for each day. Right? Each day we trade, we'll have a scorecard. So this way, basically, we're tracking our results as well as the process. And that's how we will get those results. Okay, so that's the plan. And in order to get all of these spreadsheets, we need to go to tradingwithvenus.com/turnpro, and you will be able to get all the worksheets and spreadsheets and stuff for tracking in your email. So once you sign up here, you'll get it in your email, but I've created this link so it becomes easier for everybody to download that. So it will be a lot of work. So know that, because anytime we want to become a professional anything, we have to put the work in. This will help us track everything and do it in a more of a structured manner than just randomly taking trades. So going forward, as of Monday here, I will fill out all those spreadsheets and we'll do a review every Friday. We'll see how everything went, how we did, and we'll track it and we'll make adjustments as we go along. And just remember, we're not going to have all weeks will not be winning weeks, all days will not be winning days, but as long as we follow the process, the more we do it, the better our results will be. So we're not going to measure by a day or a week or a month. We're going to measure it by the years. Can we get to that 1,100% return by the end of the year? So that's our target without falling on our face. All right, so we call it a wrap. You guys have a wonderful day and a wonderful weekend. I will see you guys next time then.
Thanks for joining us today. With much gratitude, your show host, Raman Gill.